Everyone to the first ICSS Sunday Morning Marxist Forum of 2026. Happy New Year to everybody. Not that we're happy about what's going on in the US today and what it's doing in the world these days. My name is Alan Miller, and I'm a member of the program committee for ICSS Sunday morning sessions. We're based in Oakland, California, in the San Francisco Bay Area, USA. Our weekly programs are online via Zoom every Sunday morning at 10:30 a.m. Pacific Time. You can sign up at our website, icssmarks.org, to receive weekly email announcements for our Sunday sessions. You can also view videos of past presentations and send us a message using our contact form on our website, which again is icssmarks.org. We want to call your attention to our donation page where you can support our programs. Uh, just a quick note, we're all aware of the emergency situation in Venezuela, the attack by the United States on Venezuela. Next week, we're putting together a program to give you an update and analysis of what's going on, and we'll talk about that a little bit later. We have an important program today titled Trump's Economy Year One on the contradictions in 21st century US capitalism. Can't think of a better person to be speaking on this. Dr. Jack Rasmus teaches at St. Mary's College of California and is the author of numerous books, including The Source of Neoliberalism, Central Bankers at the End of Their Rope, and forthcoming The Twilight of American Imperialism. He's the host of a weekly radio show, Alternative Visions, and a journalist who writes for numerous publications. He also has a long history of working in the labor movement as a local union president, contract negotiator, and organizer for several unions, including the UAW, CWA, and SEIU. His website is jackrasmus.com. That's jackrasmus.com, and his Twitter handle is at Dr. Jack Rasmus. He's spoken many times at our Sunday morning sessions over the years. As usual, we'll start with a presentation, and after a short break for announcements, a group discussion will take place where you can express your views and ask questions. There's so much happening right now. We expect to have a very lively and informative discussion. So welcome back, Professor Rasmus. Happy to have you.
My pleasure.
Go ahead.
Okay. The topic is where is the U.S. Economy going? To understand that, you got to understand a little bit where it's at the moment over the past year, first year Trump. Where's 2026 and beyond going to look like? You can look at this question in several different directions. One is what's happening with the real economy, that is GDP, real production, real jobs, real incomes, and so forth, which we will do. And then you can look at it from the financial market's point of view. We got these big bubbles going on, including the AI bubble and gold and silver bubbles and crypto bubbles and so forth. That's important to understand because it does eventually impact the real economy, as we saw in 2008 and again to some extent in 2020. And then we have the global economy, which is very important as well. And I think explains to some extent what's going on with geopolitics. The empire, which I've been arguing for over a year, is in process of consolidation and focusing on the Western Hemisphere and the U.S. lake called the Pacific Ocean, and trying to pull out of Europe, let Europe fight its wars in Ukraine. And then, of course, it's stuck in the Middle East, as it's always been, because of the influence of Zionism in the U.S. government. But underlying this is economic materialist reasons why these wars and this consolidation and the direction of the empire is underway. I cover this a lot in my book, as you reference here, The Twilight of American Imperialism, coming out this spring. So I want to talk a little bit about the global economy, as well as the financial markets economy, as well as the real economy. So let's just jump in with the first of the three, what's happening with the real economy. To understand that, you got to understand where the economy has been over this past year, 2025. Uh, if you look at GDP, in other words, gross domestic product, that to some extent inaccurate estimate of the economy, but it's the only one we really have. So what's happened with GDP? Well, in the first half of the year, GDP was net pretty flat. We had a contraction of GDP in the first quarter, and then we had a recovery of that contraction in the second quarter. In the third quarter, it looks like we have some growth of somewhere over 3%. Fourth quarter, we will never know. Why? Because we had the shutdown for almost 6 weeks, and there were no surveys of the economy going on by the government at that time. All that data has been lost. Now you will get numbers for the fourth quarter, but they will be phony numbers because, as the government has said, it's going to impute the numbers. In other words, take the trend where they were before the shutdown and after the shutdown in December and just plug in some numbers. So fourth quarter will be grossly overestimated as to where the economy is because the numbers will be unreliable. The numbers, by the way, are unreliable as well for that period for inflation and for employment and unemployment and other economic statistics. So that's just the thing to keep in mind. We don't have the results for all of 2025 yet. That comes out, in February with the initial report of GDP for the fourth quarter and for the year. But those numbers will be distorted because of the problems in the fourth quarter that I mentioned here. Nonetheless, what does it look like? Well, as I said, the first half of this year, 2025 rather, the first half of 2025 was pretty much a push. The economy was pretty much stagnant. Well, why did we have a contraction in the first quarter? That was because of net exports or trade, right? Trade, the number is typically a negative number because the way GDP is estimated, it's a subtraction from GDP if you have imports exceeding exports. There are four areas categories that you estimate GDP on. One is consumer spending, which is about two-thirds of GDP. Business investment, which is about 10 to 15%, depending. On top of that, you have government spending, which is 20 to 24%. And then you have negative as a result of exports being less than imports. Now, what happened in first quarter this year is that you had a big gap between exports and imports. In other words, imports greatly receded exports, so that number contracted the economy, GDP, significantly. Why did that happen? Well, that's because when Trump first came into office, he gave all these warnings about big tariff increases, and what happened was businesses loaded up on imports in anticipation of that. So we had a big gap in imports over exports and a big negative number to GDP. That's why GDP in the first quarter contracted. Well, then he made his announcement, and well, it was not as great, in fact, as what he had threatened. And the gap between imports and exports shrunk. Well, that made a positive contribution to GDP. It just reversed it. And net result was it was a push, right? We had no real growth except in AI investment, business investment in AI. Consumer spending limped along as it typically has done all year long. And government, of course, the tax cuts did not take effect yet. And I don't think they are going to have much of an effect. So that was the picture in the first half. In fact, if you look at what growth did occur in the first half, it was almost all attributable to AI investment in chips and data centers and so forth. If you took the AI boom away, there would be a recession, a net recession. But it's not really a recession because look, when you say imports are contracting GDP or lowering GDP, what does that really say? GDP is really defined as all the goods and services produced in the USA and sold in the USA in a given time period. Well, imports are not produced in the USA, but they use that nonetheless to play a big role in the calculation of GDP. Just because you had more imports doesn't mean production for exports really collapsed. So, what I'm saying is this methodology of imports affecting GDP is really questionable. We really shouldn't be doing it. It doesn't really indicate real growth in the economy, and it typically subtracts from that real growth. Well, what happened in the third quarter? Well, the same trend continued. You have the AI boom and then business investment going on. Commercial real estate continued to collapse. The residential housing went nowhere, pretty much flat, and will continue to be, long as interest rates stay above 5%, mortgage rates, which they will. So we did get some growth, but the same forces were at play. And third quarter came in a little over 3%. Okay. Now you got to understand there's another factor here that grossly overestimates GDP and economic growth. And that is all these numbers that get reported in legacy media uh, are, quote, adjusted for inflation, right? You get nominal GDP not adjusted for inflation. Well, that doesn't tell you anything except that inflation may be driving GDP. So they adjust it for inflation to get, quote, real GDP. And these numbers I've been talking about are real GDP numbers. But the problem is that the way the US estimates inflation, both the personal consumption expenditures indicator, which does the adjustment to GDP, and even the CPI, Consumer Price Index, they grossly underestimate the inflation out there. We can talk a little bit about why that is so. I do that on my show quite a bit, explaining very technically why PCE grossly underestimates the real inflation. Well, if the real inflation were accurately calculated, it would reduce real GDP numbers significantly. Instead of the 2.5% net they're estimating for 2025, real GDP would be about 1.5% in the US. Well, in other words, just sort of stumbling along, which is really what's happening. The real economy is just stumbling along, distorted by underestimating inflation, distorted by the artificial intelligence investment boom, which I think is going to go bust here within the next 2 years. And also distorted by the fluctuations in the contribution of trade and net exports and imports. So if you take those factors away, the U.S. economy looks pretty close to damn flat in 2025. It's distorted by the way they estimate and the methodologies they use in GDP, which, by the way, is also distorted long term by the redefinitions to GDP they made back in around 2015. Yeah, they just redefined it. Importantly, that added about $500 billion to GDP annually, and probably more now. What did they do? Well, they added into GDP factors like what's the value of logos and trademarks and IP and some other questionable categories like research and development, which used to be an expense, not a contribution to GDP, but now they count it. And keep in mind, AI is mostly R&D. So if we were back in pre-2015 estimate methodologies of GDP, you would not have this contribution to the extent you have of the AI boom to GDP. It would be much less. So, you take all these factors into consideration, and real GDP last year, not 2.5, closer to 1%, maybe even less. And then you go over to Europe, which in 25 grew 1.2%, the EU you have a lot of the same factors, particularly adjustments, inflation adjustments, and Europe is really flat, and so is Japan. Now, that's the core of the American empire: US, Japan, and Europe. Canada, you got the G7, right? The G7 are pretty much damn flat, I think, in terms of real economic growth, when you understand the distortions and the perversions of the methodologies that are used to estimate the real economy. Now, where is this going in 2026, given this picture? Where's the real economy going? And then I'll say something about the financial asset markets, and then we'll talk about the global economy overlay on this. Well, the real economy, GDP in 2026, I think is going to continue pretty much as it is. It may soften a little, in fact, but it's pretty much, 1%, which is just stumbling along, 1 to 1.5%. Uh, we're still going to get this distortion from trade and from the tariffs. Uh, we're still going to get this distortion for lowballing the inflation adjustment. We still have the redefinitions at play, and we have the AI boom that's still continuing. The real investment side, which is in data centers and in chips. Now, you got to understand that the data centers construction does create jobs, but those jobs go away once the data centers are created, right? It's not an ongoing manufacturing kind of a production contribution. Chips, uh, we may have some increase in chips production here, but most of the chips, except the custom chips, are really not made in the U.S. The government's trying to get companies to relocate their chip production to the U.S. I don't think that's going to happen very clearly. I think the chip companies are just playing with Trump and saying they will, and they're not really going to do it. They're waiting him out because it's much more profitable to produce offshore. Okay, so more of the same in the real economy. Uh, Nominally, I think they will report about a 2%. Probably this year, 25, it was 2.5%, close to 2.5%. I think it'll be about 2% GDP, but really 1% or less for these reasons. What about jobs? Well, here we have a major distortion of job creation going on for some time, especially last year. And even despite that distortion, uh, by the summer last year, it was pretty clear jobs were really in trouble. The job sector, the job markets, right? We were getting job employment creation numbers less than 100,000 a year now, a month rather. That's not enough really to even absorb the new entrants into the labor force. And keep in mind this job number, even when it's 100,000 or below, is also grossly overestimated. I've explained this in detail in a number of my shows. Why? Well, there's two estimates, two quote surveys of jobs that the Labor Department undertakes. One is based upon large corporations reporting to the Labor Department every month how many jobs they created or eliminated, etc. Okay, so that's not really a survey. That's about 400,000 large companies, enterprises. Uh, that survey does not pick up small businesses. Small businesses is picked up by another survey called the population survey. So you get this big difference in the reporting of what's happening in labor markets between these two surveys. Now, the big enterprise survey called the CES Establishment Survey, that's the one that reports about 100,000 or so jobs on average here throughout last year. We don't know the fourth quarter because we don't have much information there. Uh, but that fourth quarter is or last year is really distorted by the fact that you only have maybe a quarter of the large enterprises even participating in reporting that information out to the government. It used to be like a half, 2/3 of them would report, but it's dropped off tremendously. And I think that's made that job employment number really questionable. Plus, as I've said, it's always been questionable because they do what's called new business development. They take the raw data from assumptions about new businesses being created, and they add that to that reporting by the large enterprises. But that new business created number is lagged at least 6 months. So that's a questionable methodology, in my opinion. You can't take what happened 6 months ago with certain assumptions and add it to the reports and the raw data now. And then, of course, they do all these other statistical manipulations of that raw data. Statistics are just the manipulation of actual fact. And the question is, how reliable are those manipulations, those statistical methodologies? Anyway, it's the second survey that gives you the unemployment rate, which is now reported by the media of around 4%. But you got to understand that that's only for full-time workers. That does not include the 50 million or so part-time temp, discouraged, missing labor force, etc. That 4% unemployment rate is what's called the U-6, I mean U-3 unemployment rate. Only full-time workers, only two-thirds of the economy. When you add in, even when the government adds in the other 50 million, that's called the U-6 unemployment rate. That's 8% already. That's 8%. And every year, the methodologies get corrected by a new data source, by the IRS, right? And the new data source comes out and says, "Oh, we overestimated." Every August they do this. We overestimated the actual number of jobs created by over a million, and then they add the million back. Well, that happened last August, and Trump didn't like that, so he fired the BLS director, right? But that goes on every year because the methodologies are so weak of estimating jobs. For 2026, I think those two unemployment rates are going to rise. I think the 4% for the U-3 full-time workers is going to go at least to 5%. And I think the U-6, when you look at the full labor force, 8% now is going to go to 9 to 10%. So we're going to see a drifting up of inflation, I mean, of unemployment, and a continued chronic problem of creating new jobs. But again, the methodologies, it's hard to know what the actual truth is because the methods are so distorting. Inflation, I talked about that a little bit already, the problems with the PCE, inflation index, and even the CPI. PCE is, I think, somewhere just between 2 and 2.5%. That's even more underestimated. I believe the CPI, which is for those goods that are most purchased, goods and services most purchased, maybe 450 most often purchased goods. That's a little bit more accurate. That's about 4%, 3.89, 4%. I think that's really over 5% right now and continue to go higher here next year. Now you got to understand there's all kinds of problems with these. For example, uh, insurances are going through the roof, right? Your auto insurance, your home insurance, and now of course the medical insurance, ACA is doubling. ACA Obamacare insurance is going up over 100% now, and you have it'll drag up the employer insurances numbers as well. Um, so Medicaid, of course, has gone away. The supplement to Medicare, so that cost is going up. And then the auto insurances and home insurances have all been going up. Well, you got to understand that you think, well, okay, the prices have been going up. No, that's not how they estimate insurance inflation. They don't look at the price increases. They look at the profits of the insurance companies and they impute a price based on those profits. And of course, they hide the profits, so it looks like the insurance prices aren't going up that much. They're actually going up a lot more. There are all kinds of examples of this, not just insurances. And of course, import prices are going to go up as a result of the tariffs, and that's going to add to the general price level going up. So I think the inflation is higher than they've been reporting, at least 1 to 1.5% in both those indexes, and I think it's going to go up both in what they report and in the real part of the inflation. Okay, so what about interest rates? Well, we saw this war, I don't know if to call it a war, but this conflict between Trump wanting to lower interest rates dramatically here by putting pressure on the uh, Federal Reserve Chair Powell, right? He did this in his first term too, and he got Powell, he browbeated Powell back in 2017-18 to lower rates, which he did. Well, he's doing the same thing in 2025 to Powell, replacing finding ways to indict the governors of the Federal Reserve and to intimidate it. And the Fed, of course, he's threatened to get rid of Powell. Powell's going to leave his term anyway in the spring. So the Federal Reserve lowered interest rates slightly, right? Began lowering interest rates. I think they're going to lower interest rates even more next year. Well, this year, 2026, starting in the summer. Uh, but you got to understand when you say interest rates, which interest rates? The Fed has an ability to lower short-term interest rates. It's called the federal funds rate, right? They can announce it and lower it, right? And engage in bond buying and so forth, note buying. But the Fed does not have much control over long-term rates. I'm talking about the 10-year bond, the 30-year bond, et cetera. That's determined by market conditions. And those rates are going to stay high, relatively high in the 4 to 5% range. He may lower the short-term rates, but there's another phenomenon of capitalism in the 21st century, and that is monetary policy by lowering interest rates does not have the same effect on stimulating investment and consumer spending that it had in decades past. A lot of the lowering of interest rates does not get into the real economy. Why? Because capitalism has been financialized and globalized in the 21st century. That trend began back in the 1980s, around there, and has continued to accelerate ever since. It's a financialized finance capital economy, so that lowering interest rates does not turn around and get invested by businesses into the real economy, creating real jobs, producing real things. A lot of that money gets diverted by corporations and investors and wealthy into the stock and bond and other financial asset markets. It gets diverted, and it does not make any contribution to the real economy as a result. Or it gets diverted offshore because we had this big expansion of capital in the 90s and aughts to offshore investment, right? We had offshoring, capitalism moved offshore, much more profitable, right? Passed free trade laws of all kinds so that they could produce offshore and then sell the stuff back in the U.S. Without incurring tariffs and taxes by moving it back to the U.S. The expansion of capitalism offshore and free trade agreements are two sides of the same coin. You can't have one without the other. Um, what we got is monetary policy is broken. Monetary policy is subsidizing the financial asset markets, I believe, because of these reasons I've described. So that lowering interest rates is not going to stimulate the economy that much. Conversely, raising interest rates does not dampen inflation that much, which we've seen already, right? Uh, and you can't raise interest rates more than 5.5, 6%, or you're going to provoke a banking crisis, which we saw happen with the regional banks back in 2022, 23. They raised interest rates to 5.5%, and they almost precipitated a crash in the regional banking sector, and they stopped there. So monetary policy contradictions, major contradictions in American capitalism, global capitalism, You can't raise interest rates above 5.5%, and lowering interest rates does not stimulate the real economy that much. The same thing can be said, by the way, about tax cuts, right? All these big corporate tax cuts, 4.5 trillion of Trump back in 2018. Yeah, it was 4.5. It wasn't 1.5 because all the reporting of 1.5% back then by the legacy media was based on the assumption that the U.S. economy would grow 3.5% every year for 10 years and bring in more tax revenue, and therefore it was only $1.5 trillion. Well, that didn't happen, and the real tax cut was 4.5 trillion. Now they extended this for half of it in last year. Half of it was made permanent in 2018 for corporations. The other half for individuals and small companies was up for renewal last year, and they renewed it. So that stimulus is not much new. There's no new corporate stimulus. And of course, only half of it is stimulus, but it's not going to have much effect because tax cuts don't stimulate investment much in the 21st century capitalism as well. You see, there's contradictions in fiscal policy. Well, what happens to all of that tax cut for corporations? Well, the corporations give it, most of it, they turn around and they give it to their shareholders. How much are they giving every year? Well, the Fortune 500 companies alone for the last decade have been giving their shareholders in stock buybacks and dividend payouts over $1 trillion a year. In recent years, 1.5 trillion. Ever since the 2018 tax cuts, 1.5 trillion every year has been redistributed by corporations, just the Fortune 500 corporations, to their shareholders. And what do shareholders do? Well, they turn around and they plug it back into the financial asset markets. That's why we have these tremendous booms in the financial asset markets going right through the COVID contraction, right? That's why you have all these billionaires being created. It's all asset wealth. But it's also the result of fiscal and monetary policies that are now conduits, pretty much. They're to the wealthy, to wealthy capitalist investors. You see, they are in economic textbook theory. They're supposed to be policies, fiscal monetary policies to stabilize the economy. Well, they're not stabilizing the economy that much. What they're really doing is feeding the capitalist class through the financial asset markets here. They're subsidizing as never before. And that's why you get this chronic low growth here, because the tools of fiscal monetary policy are broken. They are really tools to enrich, the 1%, which of course they are doing. So what's going to happen with interest rates in nominal terms? Well, I think short-term rates will come down after the middle of the year. They won't come down unless there's a real, crash in the economy. They won't come down that much. They'll maybe come down to 3%. They're at the what, 3.75, 4%. They'll come down maybe 1%. But as I said, it won't have that much stimulus effect on the real economy. If at all, it will feed the financial asset markets. Okay, that's interest rates. Another indicator sector that's very important that's been underreported here is the dollar and the devaluation of the dollar. 10% devaluation last year, 2025. That's significant. 10%. That's about what it was during the financial crashes of the early 1970s when they went off the dollar gold standard and they devalued in order to check the attempt by European capitalists to put pressure on the American capitalists, led by the French. This is uh, Smithsonian agreement, and went off the dollar standard, the dollar gold standard, right? And allowed the dollar and currencies to float. Okay, so Europe was checked in that, and then in the 1980s, the U.S. capital checked the Japanese with the Plaza Accords. Okay, so that's past history. But the dollar devalued about 10% back then, and that was considered a big crisis. Well, it devalued last year 10%, and now you're saying much about that, right? Okay, if your currency devalues, who wants to hold dollars? If the dollar is falling, I'm a global investor. I don't want to buy dollars. I don't want to sell my pesos to buy dollars to invest uh, in maybe oil demand using dollars or commodities because, in the 1970s, an agreement was struck with Saudi Arabia to make all of oil purchasable only with dollars. That's when we had that turn. And then commodities of various kinds of dollars only purchases. Well, if the dollar is collapsing in value, I'm going to try to figure out how to buy oil not using dollars if I'm a country, right? I'm maybe going to strike a deal with China or someone else to purchase dollars, sell them oil, whatever, without dollars. And if the demand for dollars goes down, the devaluation continues. And I believe that's going to continue this year. The dollar will continue to devalue. Of course, if the dollar devalues, well, then the price of imports go up, don't they? Mm. And of course, your gap between exports and imports increases, right? Which distorts your GDP even more. So all these things are connected, you see, in the global economy. Let's talk about the financial bubbles. All right, we have four bubbles going on. We have the AI bubble, which is driving the S&P and Nasdaq stock markets, which are at records. They keep going up and up. And it's all AI bubble. You see, almost all of the stock appreciation involves these tech companies, the big seven or eight if you add Tesla, right, to it. Maybe if you add, Broadcom or a few of the others, 10 companies are responsible for virtually all the stock bubble going on. And behind that is AI. Now, there's a problem with I believe, and that is most of the AI boom now are these big seven producing the chips and building these data centers. What happens if the profitability from AI does not appear for the rest of the business community, which I don't think it will? You see, it's all these big seven companies right now. But for the AI investment boom to continue, it's got to move down into the rest of business. Now, the problem with AI moving into the rest of business, and I'm not talking about GPT, which is just a game, right? That's not real AI. Real AI is about replacing real people making simple decisions in the economy with software machines. That's what AI is, displacing real workers who are making simple decisions that AI software can make, not just in manufacturing, but also in services. Now that's where a lot of the jobs have been created over recent decades, and low paid service job. But a lot of those are going to go away. Goldman Sachs a couple of years ago estimated 300 million jobs are going to be lost to AI. I think it's even larger than that number. Of course, that's a global number. But significantly in the US, you can figure about a quarter of those are jobs that may be impacted by AI. Now, the problem, as I was about to say, with AI is that to implement artificial intelligence at the local level in general businesses, it requires those businesses to significantly upgrade their data architecture. Right now, most businesses do not have the data architecture to handle AI. They got to upgrade their servers and all kinds of other equipment, which is very expensive for them to pretty much, change their whole data architecture and upgrade it, right? That means profitability from introducing AI is not going to be that great. And a lot of them can't borrow the money in order to do that. In other words, what I'm saying is this AI boom is going to hit a wall when after the chips and the data centers are created, are they going to really be able to see profitability at the general business level? I don't think so. maybe the Fortune 500 companies, but not the rest of the thousands, tens of thousands, hundreds of thousands of businesses that aren't corporations and that are smaller businesses and corporations. I think it's going to hit a wall. Question is when. And when it hits a wall, then the financial market part of this will contract sharply. Now, the other area of financial bubbles is gold and silver going on. This is a bubble just of 2025, right? What happened? Well, gold was about $1,900 an ounce before 2025. End of 25, it was $4,300 an ounce. In other words, over 100%. Silver, even more, of an appreciation in the price of silver. Now, why are these gold and silver markets and cryptos to some extent so overvalued? And by the way, they create great wealth for the billionaires and for Trump, who's got his hands deep into cryptos. Uh, why do we have such an appreciation? Well, because of the instability in the global economy and global political system, and the devaluation of the dollar drives up the price of gold and the price of silver, because silver is in part industrial uses as well, in electronics and automobiles and so forth. So there's an industrial demand, and there's also a speculative demand that drives up silver along with gold. When gold goes up, silver goes up as a substitute. Okay, so gold and silver are going through the roof as safety hedges to the instability of the economy. They are also going through the roof because China and the BRICS are buying up gold feverishly over the past year. Why are they buying up gold? Because gold will be the foundation for their new currencies, which will be a substitute and a challenge to the US dollar. And as gold becomes the gold reserve, the primary reserve of these central banks of these countries, and it creates their own currency, they're already trading oil based on their own currencies and to some extent, with the collateral of gold behind it, right? Well, that will lower the demand for the dollar even more, right? If I'm not you buying dollars in order to buy oil and other commodities, I'm using some other currency. Well, then the demand for dollars is going to decline even further. And that's the great threat and challenge to the empire from the BRICS, you see. It's forming an alternative currency and an alternative international payment system because the U.S. bank run SWIFT, that's an acronym payment system, is the means by which the U.S., through its banks, can see what countries using dollars to buy oil are violating the sanctions. You see, the SWIFT is the tool by which they see it. But if the BRICS and others move to another international payment system, which they already have, by the way, both China and Russia have alternative payment systems. The U.S. empire cannot see who's violating the sanctions, and the sanctions then don't work. Well, for many reasons, they're not working already. But the consequences is a less of a demand for the dollar. The agreement in the 70s with the Saudis to make oil purchasable only with dollars is breaking down. That's a reflection of the decline of the empire that's going on. The devaluation of the dollar is a reflection of the decline of that empire as well. I would say emphasize decline. I am not in the camp that says the empire is collapsing. It is not collapsing. It has many resources, and it is beginning to use those resources, including direct military and regime change activities on a scale never before witnessed. The soft power has pretty much disappeared in the empire, and the empire is, the gloves are off. The emperor has taken his clothes off, and we're seeing what the empire really is capable of doing. And we're going through a period here, I think, of this transition to the use of more direct power by the empire. And as I've been arguing, the empire is reconsolidating, paying attention to the Western Hemisphere and the Pacific. I think, yeah, under Biden, it clearly, according to capitalists, behind the scenes, too much attention to Europe and its Ukraine war, which is really another European war, right? Threatening under Biden to become the third world war. I think the capitalist elite and their political elites have decided that too much resources, too much attention on Europe. Let Europe fight that war. Ukraine is its war. That's the decision of the new Trump wing. Uh, of course, we are stuck, both wings of the corporate party of America, aka Democrats, Republicans, are stuck in the war with Israel and its neighbors um, because of the deep influence of Zionists in the U.S. government at all levels. Uh, so they're stuck with that, and they let the Western Hemisphere atrophy their control of the hemisphere during Biden, and now they're refocusing on the Western Hemisphere, and that's what you see with Venezuela. But also a lot else was going on. As soon as Trump came in office, what did he do? He threatened Panama because China had a number of projects, Belt and Road project going on in Panama, and he threatened Panama that it's going to be 1989 again if you guys don't kick the Chinese out, which they did, and which private equity then stepped in and bought up those China developments, and they solidified their recontrol over Panama. They threatened Mexico that if you allow the BYD, the China electric vehicle company, to establish the biggest EV plant in North America, we're going to have trouble. And he threatened, Trump threatened intervention, which I think is still coming with regard to Mexico now that they pulled it off with Venezuela. So Mexico stopped that project, right? Uh, Other projects, Ecuador and Peru were building with China, expanding their ports. China had plans to build a railroad from, I think, Ecuador, Peru ports into Brazil. All that's been stopped. We know what happened in Argentina. The U.S. Assisted their friend there, Milei, to take over Argentina. We've had rightward swings in Chile and Bolivia. And of course, next targets, I believe, are Cuba and Colombia. Colombia favored, was cooperating with Maduro and and Venezuela, and of course, uh, Cuba was getting Venezuela oil. Uh, so Colombia was too friendly with Venezuela, and I think they're going to threaten the hell out of the president there and get him removed one way or another. And then they're going after softening up Cuba. And the big threat, I think, is Mexico, because Mexico fits nicely into this template they have of blaming uh, the president of any Latin American country with drug trade as an excuse, right? Well, they're going to be able to do that easily with Scheinbaum in Mexico. So I expect more threats to Mexico forthcoming, and that the U.S. will force Mexico to work with it to go after the cartels, which are in Mexico, which are going to really destabilize that country. Okay, so
Jack, we're I think we're going to have a lot of questions today, so let's leave some time. If you want to wrap up, we'll
okay, let me
we'll
wrap
we'll
up.
transition.
Okay, Greenland is part of that as well. The U.S. wants to take over Greenland. We'll take it over, I predict, in 26, 27. Why? Because it's allowed its Arctic strategy to lag. Uh, Russia has a much advanced Arctic strategy. The U.S. has none, virtually. Greenland is strategic in that. And all the threats and intimidations and insults of Canada is part of that. And Canada now, as a result, is saying, well, we're going to invest more in Arctic strategy, right? So Greenland is part of that. And Greenland will come under a U.S. protectorate. So this is the Western Hemisphere. In the Pacific, final comments here. The U.S. Has been feeding its allies in the Pacific significant arms buildup going on there. Uh, 4 or 5 years ago, uh, whether you looked at Taiwan or South Korea or Philippines or Australia, they were buying less than $1 billion a year in U.S. arms. In 2024, that increased to about 4 to 5 billion each in U.S. military equipment and about 11 billion in Taiwan. The U.S. is building up militarily that whole area, and it's just taking time to do it. But that's the whole direction. Japan is becoming more militaristic with the encouragement of the United States to build up its military as well. So there's a preparation going on long term, but it's being held back by all this European involvement and the need to continue in the Middle East, going after Iran. I think that's going to happen now, and consolidating in the Western Hemisphere. Um, but it's all about the economy. You see, there's a materialist base to the decline of the empire here that I don't think is being paid enough attention to. And I do that in my book, a materialist analysis of why the empire is doing what it's doing militarily and why it is in decline. But one should not underestimate the resources and the response. Okay, so that's how I see 2026, 2027. We're going to see more direct military activity by the empire. But one last thing I haven't said that I need to, and that is when I talk about the cost of empire. What are those costs? Well, you hear about the Pentagon. Oh, we're spending $1 trillion on the Pentagon. That is only the tip of the iceberg because a true defense spending is over $2 trillion. Some of this defense spending gets into Homeland Security. It gets into the CIA and the intelligence agencies. It gets into veterans, which is over 400 billion a year, past wars, right? When you look at the whole picture of what the U.S. is spending on empire, it's over $2 trillion in the budget every year. And the question is, can it continue spending $2 trillion? Well, part of Trump's tariff revenues of 250 billion now, over 88 billion the previous year, is to try to offset those costs. But they're going to have to sell more treasuries. But China and others are not buying treasuries, and the Europeans who were filling that gap in recent years are not buying as much now either. So, how are they going to finance the empire with the cost rising and the sources of revenue declining? That underlies what's going on in geopolitics as well. And by the way, that's a primary focus of my forthcoming book.
Thank you, Jack. Very informative presentation. After a few short announcements, we'll have questions and comments from participants. We're going to ask everybody who wishes to ask a question or make a comment to please raise your hand by clicking on the reactions button, raise hand at the bottom of your Zoom window. Please keep your questions short. Ask one question at a time to allow everyone to participate. And keep in mind that this is a comradely forum for political discussion. Please show respect to other participants and the moderator of today's session. Also, please try to keep your questions on the topic. I know we covered a lot of different aspects of what's going on, but let's really focus on the issues that were raised in Jack's presentation today. Next week, we're going to have an emergency session on what's going on in Venezuela. You should go to our website, follow our website at ICSSmarks.org in order to get the details. You can sign up at ICSSmarks.org for email notifications in order to receive weekly announcements, including for next week. We're going to have a session next week where you're going to really hear a lot about what's going on that you don't get in the news blackout in the mainstream capitalist media. Okay, so with that, what we're going to do is let's start off, and I think I'm going to go to Polina to start. So, Polina, please go ahead and unmute yourself and ask your question.
Yeah, thanks, Alan. I actually have a Minor question. I'm sure that the other people who will follow will ask more geopolitical ones. I would like to know, Jack, your analysis of the wealth tax initiatives, especially the one that is being pondered in California, how that would, well, basically your take on the wealth tax initiative of this year. Thank
Do you want me to respond or?
Yeah, we'll
Okay.
do one at a time.
Okay.
Yeah.
All right. Well, there is wealth tax. Most of the wealth, as I said, is financial asset driven, right? So if you talk about wealth tax, you're obviously talking about taxing individuals, right? Wealth in individuals. Well, where do they make their wealth? They either make it from investing offshore, uh, and that's involved in what's called foreign direct investment portfolio investment, or foreigners investing onshore in financial asset markets, and that's called the FDI portfolio into the U.S., right? Out of the U.S. It's a huge number, trillions of dollars every year invested in financial asset markets in the U.S. and by investors in the U.S. offshore. You could tax either of those, and it would be a very minimal tax, very minimal, to produce hundreds of billions of dollars of tax revenue every year. Uh, that's anathema to the capitalists. They will never allow that. You think that this Congress, which just passed $5 trillion permanent Trump tax cuts here last year, is going to even take a breath to consider a wealth tax? No, I think those that are proposing wealth tax, which are the Democrats, are doing it for tactical reelection purposes. That's all. They know it's going nowhere, and not even nowhere, less than nowhere. But your point is well taken. It's a vast pool. It's a vast pool of capital that can and should easily be taxed very minimally to produce a huge revenue stream. But they will not allow that precedent to ever be established here. And I'm just talking about foreign direct investment flows. There's other financial asset flows within the U.S. That you can talk about being taxed, wealth tax, right? Well, wealth tax. Oh, they'll talk about, and they have been. The Democrats have been talking about, oh, well, millionaires tax and billionaires tax and so forth. Uh, it's just an obfuscation, in my opinion. It's just phony marketing by politicians, particularly Democrat politicians. They talk the talk. The Democrats talk the talk, but they never walk it, especially when it comes to taxing capital.
Okay, next is Raj, followed by Hobie. Raj, if you would please unmute. And everybody, please try to keep your questions to one question, a couple of minutes. We've got about 8 or 9 hands raised, so a lot of interest. So please go ahead, Raj.
Jack, thank you. Very informative talk. I agree with you that none of these measures are doing anything, at least for the working people of America, and they haven't been doing. The stronger the ruling class got, means the very rich upper 1% of the people, the worse off got the working class in the USA, because they invested money elsewhere, made tons of money, and now they said, okay, where will you go? And yet Trump has support among this working class, pretty substantial support. And so how will this work out? Because in Venezuela, if it succeeds, for example, to capture all the oil, control the country, I don't think that's going to be easy, but let's say if it happens, it'll only make the fat cats fatter, and that will only make, seems to me, work against the working class of the United States. What's your opinion? Thank you.
Yeah, well, clearly Trump and the imperialists want Venezuela oil. Clearly, that's fundamentally what's behind this. It's not drugs. Why do they want Venezuela oil? Well, you got to understand the U.S. Produces 13 million barrels oil a day. It's the biggest oil producer in the world, but it's because of fracking in the last decade and decade and a half. Those fracking wells are going to disappear within the next decade. They're draining the fracking wells unless they discover new wells. Uh, and they need a bigger supply of oil. They also need a bigger supply of oil long term. You know, all this oil stuff is long term planning because they chased Russia out of Europe, and Europe is increasingly dependent on U.S. energy, both gas, natural gas, and oil. They're going to have to supply Europe. They can't do it out of U.S. fracking wells because they will create even a greater shortage in the U.S. and drive up prices to a level in the U.S. that are unsustainable politically. So they had to get secure oil, and a lot of that oil will be sold by American oil companies in Venezuela now, will be sold to the Europeans to fill the gap of after they've chased Russia out of Europe, providing Europe of energy. You see, that's what a lot of this Ukraine war was about, to the U.S. to reassert control over Europe and make it economically even more dependent on the U.S. because it is part of the core empire, you know, the G7, and get Russia the hell out of Europe, not just energy, but in everything, and make Europe dependent on the U.S. in terms of energy. But the U.S. needs a supply of energy in order to do that. And that's what Venezuela is really about, in my opinion. That's
Yeah,
what Trump
but my
says.
question was a little different.
I'm
My
gonna get there
question
now.
was about, yeah, okay.
Yeah, well, you know, what's the impact on the working class here?
Yeah.
Well, I think the working class in the U.S. unfortunately has been tamed pretty much. It's under control. The unions were pretty much broken. They're still there, but they don't have the influence that they used to have. And you know, the working class was given a crumb here by Trump during the election. It was the working class was you know, so disappointed with the Biden administration because they threw some COVID programs at it, then took them away, and then some, you know, and gave the money, by the way, to big corporations in 2022 in three big investment subsidy bills that were passed. Um, so, you know, the working class really got nothing and hasn't gotten anything for 4 decades now. Real wages have continued to decline for 4 decades, right? And what did the Democrats throw at the working class? They threw identity politics and woke and anti-Trump, and that was it. You know, when Trump ran, he was even clever enough to offer three tax cuts for the working class, right? Overtime, tip, no tax on tips, and Social Security, right? At least he offered something. Now they took back most of that. They didn't deliver most of that, but they threw a few crumbs, you know, in low end, no tax on tips and overtime pay, and they cut back the Social Security income tax cut. But they threw some at the working class, and I think that's how they bought some support of the working class. And the Democrats didn't even respond. You know, I mean, there was a weak thing I think about they didn't even respond to compete on Social Security tax cuts. And you know, it was a Democrat program, you know. It shows you how far the Democrats have gotten away from the working class, and the class knows it, you know. And you know, they've turned their backs on it pretty much. And the only other game in town was the Republicans. You see, that's the big problem with American politics, and that is you have a one-party system with two wings, right? Republicans and Democrats, who in some ways are in a food fight with each other. But there's no independent working class party or even a semblance of that on the scene. And as long as I believe that situation exists, the working class will be getting the short end of the stick as it has continued to get and will continue to get.
Okay, Hobie, followed by Sharon. Hobie, if you would unmute, please. Keep your question short.
Sure. I really appreciate your very comprehensive and condensed analysis of the, you know, geopolitical and economic situation. And on that very cheery last note, I noticed that you indicate some pretty serious contradictions facing the financialized capital, certainly here in the United States. And it seems to me that they have an array of whack-a-mole to play, Venezuela being the latest one. I don't get a sense from your comments yet what the actual limits to empire might be. And I really appreciate a little articulation of that because this cannot continue forever, can it? I mean, to what extent are they going to immiserate the working class here in the United States? Even that has its limits, right?
Yeah.
Please,
Go.
please comment.
Yeah, excellent question. The limits, as I've implied, and in my book I go in much more detail, the limits are material limits, they're economic limits. They are the limits of the cost of the empire running amok over $2 trillion. That comes out of the budget deficit, $2 trillion, and the lack of revenues to fill that growing gap. Right? What are they doing? They're cutting taxes on the wealthy and the rich, which makes it even less revenues. GDP is not growing, so they can't fund the empire out of real growth. Debt, which we didn't get to talk about too much, they've been debt financing the empire up until now, but we've got $38 trillion debt, right? And we're paying 1.1 trillion interest on that debt every year that goes into the budget deficit, right? And we're running deficits of 1.5 to 1.8 trillion every year that they have to somehow sell bonds, treasury bonds to the world, 30% offshore, 70% onshore. So the limit is if that budget deficit gap keeps growing, can they sell enough bonds to fund that gap? Given that offshore purchasers of treasuries are declining, can they make that up with onshore purchases from wealthy investors and corporations, right, to fund that deficit, which is used to cover the costs of empire, which are rising out of control? You see, that is the nexus, I think, of the fundamental crisis. Now, so far, they've been able to offset China and other countries' declining purchases of treasuries by getting the Europeans to fill that gap in recent years. But with Trump fighting with the Europeans, well, and the European weak economy, are the Europeans going to continue to fill that gap, buy those treasuries? I don't think so. I think we're entering a period where they're going to have more and more trouble raising funding for the budget deficit and therefore paying for the cost of empire. The only way they're going to be able to sell more treasuries is to raise the interest rate that they pay the bond purchasers, which will slow the domestic economy to some extent. Okay, that's why Trump is turning towards tariffs and revenues, which have increased significantly. You see, that's what the tariff war is really about, right? It's really about increasing government revenues. You know, in 2023, what did we get from tariffs? $88 billion tariff revenues. What did we get last year? Maybe close to $250 billion. That's going to go up. Trump is going to continue squeezing. He's going to consolidate his tariff war here, in the coming year. And then after the midterms, he's going to go for another bite of that apple. They're trying to make up with another revenue stream, which is the tariff stream. And they got other crazy schemes like selling gold cards to the rich, and taxing remittances and so forth. That's mice nuts. They're not going to be able to make up the difference. But it shows that the empire is getting desperate and looking for new ways to fund it because the costs are getting out of control. Empires are not conquered. Empires collapse from within. The British Empire collapsed because of financial problems. The Roman Empire collapsed because of financial problems internally, you see. It rots from the inside out. And the U.S. is rotting, beginning to rot economically from the inside out. And of course, that means it's going to squeeze the working class even more, to answer the previous question even further, right? But to answer your question, the problem is in the runaway cost of the empire, and that's partly why they're trying to consolidate. You know, they feel they're wasting money on Europe and Ukraine, and that's the source I would look at to answer your question.
Okay, next is Sharon. Again, please try to keep your questions short. The stack keeps up with each question, followed by Laura. So, Sharon, please go ahead.
Thank you very much, Jack. You talked about the $1.5 trillion redistributed to shareholders every year in the form of dividends. And I was thinking that that doesn't just go to the 1%. So apologists for capital will say, but we, the working people have 401ks, and that part of that 1.5 trillion goes to them. And that reminds me that, although we are the 99%, we're very stratified. Only part of us, the upper strata of the working class, gets those dividends. Can you comment on that?
Yeah, that's a good question. Look, the ownership of stocks, and I even talk about bonds or derivatives, right, is in the top 5% of the population. They're the group that really benefits to some extent from stock appreciation and financial asset appreciations of various kinds, right? And yes, it's true. There are some 401ks, and if you have IRAs, you have some in stocks, perhaps. And to that extent, yes, some of the crumbs are left on the table for the working class, who, if they are lucky, they have 401ks. Now, most people don't have 401ks even, and certainly IRAs. I think it's half of the people, retirees, are living solely on Social Security income, which is about less than 2,000 on average a year. Over half. I mean, they're in extreme poverty. So yeah, some of it is dribbling down in 401ks, but it's insignificant as far as the total class is really concerned, I think. And most of them don't pay any attention to it. And the big beneficiaries of the stock buybacks, the dividend payouts, are the big stockholders, particularly in tech. You see, the owners and managers of tech are, unlike maybe in General Electric or in General Motors, right? The stock is concentrated in the management and owner sector, the senior managements. That's why you get the tech people being the new billionaires. All right. And it's been chronic. Under Obama it was like 800 billion a year in stock buybacks and dividend payouts, and now it's double that. It's double that, right? It's 1.5 trillion at least, and rising.
Okay, next is Laura, and I'm going to mix this up a little bit, followed by Eric. So, Laura, please go ahead and unmute. Keep it to 2 minutes. The stack is growing now, so please go ahead.
Okay, you mentioned free trade agreements, and related to that, I wanted to say that Venezuela was a ringleader in the region of South America, Central America, and the Caribbean, and Venezuela had the resources to exert independence from the U.S. empire, and that along with oil, is one of the very great reasons that Venezuela has been targeted. And what do you think about, when you talked about the free trade agreements, there was one, the Free Trade Area of the Americas, that was Chavez came and brought a shovel to a summit and say, we're here to bury the FTAA. It did not pass. Also, the Trans-Pacific Partnership and things like that. What do you think about those trade agreements that failed?
Yeah, well, free trade begins in '88 with Canada, right, as part of the core of what was called NAFTA, now UCMCA, whatever, Mexico and Canada. That was the big one. Then they gave China preferred nation trading rights, which is, free trade light. And then, of course, under Bush, we had a big expansion of free trade agreements, to the Caribbean and Central America. And then they attempted under Bush to expand that to South America. That was the FTAA, Free Trade Agreement in America. Now, that didn't succeed because the South American countries formed their own free trade zone called Mercosur, right? And headed it off. And then the emphasis began, under Obama on Trans-Pacific. Well, by the middle of the 2010s, Obama period here, free trade, the negative impacts of free trade on jobs and so forth were so obvious that free trade fell out of favor, and TP did not pass, Trans-Pacific Partnership. And then by 2016, it became a topic in the elections of negative, right? So pretty much free trade expansion ended. A lot of bilateral free trade agreements signed by the U.S. in the interim, okay, a couple dozen maybe. So free trade kind of fell out of favor. And about 2012, 2015, and it has been ever since. They cannot, but I believe the U.S. has entered the back door. Some of the Pacific countries have formed a kind of a Trans-Pacific Partnership, and I think the U.S. quietly has sort of become a junior member to that through the back door. In that area, but you're very accurate in saying that that was one of the reasons they went after Venezuela, not just the oil, but Venezuela, had an economy, and Venezuela was about to join the BRICS, by the way, and that was another one. They did not want Brazil and Venezuela, two big economic powerhouses in Latin America, joining the BRICS, because then who knows, Mexico would have been next, and whatever would have happened. So Venezuela was kind of the crux of intimidating all of Latin America. Wanted to go independent. You see, the empire pretty much focuses on anybody that tries to break away from it, right? And it's focusing, of course, on the BRICS. But you got to remember what's happening. The global South economies today are not what they were in the 1980s. They were totally dependent on the empire, on the West, the G7, for capital and for markets. They have industrialized significantly in the last 40 years, and they want to go independent. And that's what they're doing. And that's what the empire is worried about, independence. And now they got another pole that they can orient to, and that's the BRICS, you see. There was no alternative institutions before. Now there are, and now they're independent. Independent meaning they are economically self-sufficient enough that they cannot be as easily intimidated and pushed by soft power or whatever back into the international rules order of the U.S., right? That's what's going on. It's a breakup of the empire. The empire, without soft power now, has only the resort to force. And that's what we're seeing.
Okay, again, the stack does not seem to be shrinking too much. We're going to go to Eric, followed by Peter, followed by Janet. So please go ahead, Eric, unmute.
Yeah, hi. Really short, really simple question. You described the increase in prices of gold and silver from your point of view as in air quotes bubbles. Wouldn't it be more accurate to think of that as simply a reflection of the weakening of the dollar? And as you've mentioned very well, other economies increasingly using other currencies to trade, or is it in fact a bubble? And maybe you could just say a little bit more about that, about the role of currencies and the possibility of, which is discussed a lot, I'm sure you know piles about it, about an alternate world currency put out by the BRICS countries. Thank you.
Yeah. Well, it's not mutually exclusive, those 2 points. Yes, it is largely being driven by the decline of the U.S. dollar. It's also being driven because gold is a safety valve to those. You put all assets are substitutable, right? important point. And the wealthy move their wealth around between assets. And when it looks like there's a problem going on in instability in the global economy or politics, investors put their money into gold. So the devaluation of the dollar automatically raises the price of gold. But that's not the only thing driving the dollar. You see, there's a speculative demand for the dollar as well. As the as gold rises, more investors jump in because they believe it's going to rise even further and they're going to make some speculative profits off of it. So what starts as the devaluation of the dollar is exacerbated because of speculative demand for it. And then you got the third factor, which is the formation of the BRICS and the attempt to establish their own currency by using gold as collateral, and their central banks are buying up gold to do so. And also they're buying up gold because they don't want to be caught by U.S. Sanctions, you see. The Russians, got caught with $300 billion stuck in European and U.S. banks, right? And they're losing it. Well, other countries are saying, well, we don't want to leave our money in these banks. We're going to put it into a safe haven. Maybe we're going to buy gold, right? So you got multiple factors driving up the price of gold: speculation, geopolitics, sanctions, dollar devaluation. Which one is playing a bigger role is hard to actually quantitatively estimate. But I believe the move towards another currency, which is not imminent, by the way. Mostly you got the BRICS trading in their own currencies using yuan, renminbi, whatever yuan, China currency, which is still only like 4%, 4 or 5% of global reserves. The dollar is still around 50 to 60% of global reserve currency. It's been pretty stable, right? Which is an indicator that it's not collapsing, even though you have these trends underway. So what's going on with the dollar is, I mean, with gold and the other forms of non-dollar wealth, whether it be silver or cryptos or whatever, digital currencies. It's a reflection of the beginning of the weakening of the hegemony of the U.S. dollar, which is the key, the crux to the U.S. global economic empire.
Okay, next is Peter, followed by Janet, followed by Lucy, and we're moving to the end. We're going to run over just a few minutes. I'm going to try to get all the people who have their hands up, but no more questions after that. So please go ahead, Peter, followed by Janet. Please unmute, Peter.
Yeah, hi. This is a great conversation. I want to kind of follow up on a statement you made earlier about the growing interest. I think we're up to over 1.5 trillion, approaching 2 trillion perhaps. And my question isn't simply about the interest, but all government spending. And I'm going to ask you to maybe clarify what this represents. I'm sharing this chart of government expenditures. The very bottom, of course, is discretionary. That's what we can choose to cut if we have to. But the growth in interest on the top 5 pieces, Medicare, Social Security, interest, other healthcare, these are irreversible. So when does this ever, how do you actually keep a government going if these unchangeable forces, expenditures just continue to expand without declining ever? Where does that end up in terms of the entire, keeping a government afloat? And what does it do to the underlying economy when all these expenditures just tend to eat up everything else in the economy? Do you have a feeling on that?
Yeah, well, if you look at the deficits that occur every year, there's really like 4 or 5 real causes to these deficits, budget deficits, which is about 1.8 trillion every year now for going on almost 5, 6 years, and before that, 1 trillion. The deficits are really a function of several factors. It's not rocket science to figure this out, right? First of all, we've been cutting taxes, mostly on investors and rich and corporations since 2001. The U.S. has cut $17 trillion in taxes. 3.8 trillion, I've done these calculations, 3.8 trillion under Bush. Obama comes in, cuts taxes 300 billion plus another 800 billion, extends the Bush tax cuts 2 years. And then he agrees to cut social programs by $1 trillion and make the Bush tax cuts permanent in 2013 at a cost of $5 trillion. So Obama cuts taxes even more than Bush. And then Trump comes in and cuts taxes 4.5 trillion. And then, of course, you got COVID and you got tax cuts under Biden, particularly in 2022. And now you got 5 trillion permanent tax cuts under Trump. We've got massive tax cutting going on. That's impacting revenues, and it's not generating investment. You look at GDP, it's not generating investment, right? So you have massive tax cutting. That's contributing to this huge deficit. You have this run up in defense spending that I've been talking about, $2 trillion a year now, right? That's a big factor. You've got the insurance and the healthcare industry gouging government healthcare programs. That's added significantly. You've added Homeland Security, hundreds of billions of dollars. You have Part D passed of prescription drugs, which they didn't pass any taxes to cover, unlike Social Security, right? And Medicare. So that's out of the general budget. And then you have these deficits every year of over $1 trillion for a decade now that add to interest on it, which are now running $1.2 trillion a year. Those are the reasons. In other words, you got mismanagement of the domestic economy as a result of the government institutions giving big capitalists whatever they want, whether it's the military industrial complex and the neocons, whether it's big corporations, whatever it is. And of course, the Supreme Court opening up Citizens United 2010 just opened the floodgates for this, you see, and own these politicians now who just keep passing these tax cuts and these spending bills on the Pentagon and defense and so forth. And that's the source of these huge deficits. Now, how long can they go with these deficits and financing these deficits is the question. And no one knows exactly for sure, but we do know that it's creating significant stress, and it can't go on forever. You can't keep paying rich bondholders. The CBO, Congressional Budget Office, has estimated by 2032, I think it is, that we will be paying wealthy bondholders, buyers of treasuries, $1.7 trillion a year, not 1.1 now, but $1.7 trillion interest. That comes directly out of the budget. While when you're tax cutting and spending on wars and you're giving the wealthy 1.7 trillion, what's left in between? Well, they're going to try to take it out of the hide of the working class, right? But that's a huge cut that's coming. This is part of the internal finances of empire that are reaching a critical stage, I believe.
Okay, next is Janet, followed by Lucy. And again, please try to keep your questions short. We want to wrap this up soon. So please go ahead, Janet.
Okay, thank you, Alan, and thank you, Jack, and Happy New Year to everybody. Kind of piggybacking on Peter's question, I'd like you to talk about the impact of the trend to privatize public services and how it affects the domestic economy, specifically when it comes to Social Security, which affects many of us here, and especially with respect to what happened with Trump's Doge project. It's my understanding that the Social Security reserve that paid for with FICA taxes will be completely depleted perhaps by 2033 if no changes occur, and our monthly Social Security payments will decrease by close to 25%. And to deal with that, they'll be trying again to privatize Social Security.
So would you talk about that with respect to where Social Security fits into our domestic economy? Thank you.
Yeah. Well, privatization has been going on since Reagan. This is part of the neoliberalism policy mix, deregulate, privatize. Why are they privatizing? Well, they're selling off public works and public resources here. And it's part of raising money. They sell off the spectrum, the radio spectrum and other assets to the government to raise money. Selling off assets is always a sign of bankruptcy, in the private sector. I'm not saying the U.S. is bankrupt. You can't go bankrupt. But nonetheless, they're trying to raise revenue that way. Now, you got to understand what's happened with Social Security. Back in 1986, there was a major Social Security Act, which was designed to shore up Social Security for the boomers, the 77 million boomers who were going to start to retire after 2010, which they have. Right, 77. That raised the tax and sort of indexed it to income. And people paying the payroll tax pay more and more payroll tax, except the very rich, they cut it off at the cap for the rich. So that whole idea was to raise the surplus in Social Security, which it did, by the way. By the time Bush came into office, there was a $4 trillion Social Security surplus, $4 trillion. They've been tapping into that ever since, you see, and reducing that, including the Democrats. You give these tax cut, payroll tax cut holidays, et cetera, right? So that now, and the cost of Medicare and everything running up has depleted those funds, not just the retirement fund. And yes, that's gone away. Every year they actually take that real payroll tax money and they use it to help balance the budget. They put in an IOU, a special treasury bond that says, oh, we've paid the interest on this, that's part of the gross interest on the debt, but it's fixed. You can't respend that money. You see, it's an IOU, it's a promissory note that's gone into the trust fund, and it looks like it's okay. But even so, the monies are going, as you say, the surplus is going to totally disappear by 2032, whatever. And then all that's left for funding Social Security retirement is the payroll taxes that are being collected. And that'll be about 75%. Now, they could solve that problem instantly, easily. All they have to do is remove the cap on Social Security. If you make more than, I forget what the cutoff now is, 185,000 or something like that, right? Yeah, you don't pay Social Security taxes on that. All you have to do is remove that, and the problem goes away. But they want to keep Social Security looking like it's in a crisis, a financial crisis, because as you pointed out, that's how they will then push the privatization of Social Security. And by the way, the privatization was first raised by Clinton. Well, let's take some of this trust fund and put it in the stock market. The big banks are they salivate over the fact that there's this $1 trillion fund that they can't tap into and get people to invest in their stocks with, and they're letting it go to a crisis period point so that they can then privatize Social Security, just as they privatized most of Medicare by creating Medicare Advantage. You see, they let them in, the big insurance companies who are wrecking the cost structure of Medicare. By the way, they want to do the same thing with Social Security. Bush attempted this to create Social Security-like IRAs, but it didn't pass. Back then, but that's where they're going with this, and they're going to try to do this. And if you got a Congress that's owned by big investors and corporations, as we do have now, and two parties that are indistinguishable in terms of their policies, one is just more incompetent than the other, then the prospects for easily reforming Social Security by taxing the wealthy doesn't look promising, in my opinion.
Okay, Lucy, followed by Richard. And again, we're going to try to wrap this up quickly. We've got really an amazing interest in the discussion. So, Lucy, please go ahead and keep it short.
Okay. Yeah, thank you very much, Ed. I learned so much from you. It's a question I have is regarding the China factor in Latin America, because it seems to me that they have some gigantic projects set up, like in Peru, where they have this big port, right? And then I don't know, you mentioned many of them yourself, but since the US is still dependent on China to some degree, they can't really decouple like they wanted to before. Um, what effect, what power does China have? Maybe I don't know if it's power, but they probably would like to negotiate something, I don't know. But like, I'll let you have this port if you can let us have more rare earths or shit like that, something like that. Do you
Uh,
think there's something like that?
could you summarize your question? I'm having a little bit
Oh,
hard time
okay,
hearing you. Your
okay,
voice is
okay.
so soft.
I'm sorry, I'm sorry. Okay, no, what I was gonna say is the China factor in all this. The US is trying to tighten its reins in South America, and they are gonna probably try to get the main natural resources from it. They will try to plunder the big time. But at the same time, China has, I think, a lot of projects set up that they would be losing a lot of the
Mhm.
whatever they've invested in and so I don't think that they would want to give it up that easily. So
Yeah,
they would probably resist and I don't know. I'm just wondering if that's gonna be a problem for the US
yeah.
in its
Okay.
tightening the reins
Yeah.
in
Yeah, well, there's a wing of the Republican Party that really wants to focus on China. But Trump had tried this trade war with China in 2017, 18, and it totally flopped. Although
Mhm.
he did get some revenue out of it, and that's been enticing them to try to get more revenue. He went after China here this past year, but China pretty much blocked him and saying, "Okay, no rare earths for you," right? And the U.S. Auto companies and tech companies went to the White House and said, no, 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 you can't do this. So they put China on hold here, the war, economic war with China.
With China.
And they are, as I said before, building up Taiwan and their other allies militarily at a feverish rate going on. I heard China just intercepted a ship a U.S. ship going to Taiwan that was full of
Yeah.
HIMARS and other weapons system, anti-aircraft weapons systems. So China is putting pressure on Taiwan. The U.S. Is too preoccupied elsewhere. It's been overextended in Europe with NATO and the Ukraine war. That's why I think the capitalists, imperialists say we got to get out of that. It's too costly. It's Europe's problem, right?
Right, right.
And we can't get out of the Middle East because the Zionists have us, by the throat in that policy.
Oh, that's right.
And we got to consolidate Latin America. I think the U.S. empire will succeed in driving China out of Latin America investments. They will succeed. Okay. It's pretty hard for China or Russia to support any country in Latin America. That's not true for Africa. That's not true for Africa. The U.S. does not have leverage over Africa. And if you look at Africa, China investments in Africa are exceeding the World Bank investments in Africa. China has spent almost 200 billion investments in Africa, and they just pledged last year another 50 billion over the next 3 years. And World Bank projects are shrinking, right? So I think Africa is the location where China will prevail in its investments. Europe cannot any longer play a role in Africa. We saw the French driven out of North Africa, right? And the U.S. has an Africa command now, but the U.S. does not have the reach. It cannot do in Nigeria what it did in Venezuela, you see? So, short, I think China's on hold till they build up the military response there and economically. But that doesn't mean that China is going to be a pushover. No way. I don't think China is beyond, has advanced beyond the U.S. in certain areas of technology, quantum computing and AI and so forth. And of course, they have hypersonic weapons now, and they're building up, their navy and military. I think the door is closed on the U.S. Being able to force China back to a position of where it once was. I think there'll be a compromise of spheres of interest. And as long as China does not expand into Japan and South Korea, the U.S. will have to accept that development. And China will prevail in Africa, I believe.
Okay, just a few more short questions. Richard, Jim, Golden Jean, then we'll wrap this up. Sorry, Jack, about keeping you over, but there's so much
I have
interest
no
here.
problem. I have no
Okay.
problem.
All right,
Much
let's
as
keep the questions very focused, everybody. Richard, please go ahead.
Maybe I can give you a problem. Yeah, I wanted to get back to a couple of questions that were brought up earlier on, and get into a little bit more theoretical exploration thereof. And that is that according to Marx, standard Marxist theory, as the working class becomes more eviscerated, there's a tendency to become more militant and theoretically to have revolution. That does not seem to have happened in this country over the last 40 or 50 years. In fact, I think you make the argument that in fact it's gone counter-revolutionary in large measure. Could you maybe address the reasons for that, or explore it a little bit? Thank you.
Yeah, well, I spent about 20 years in the labor movement in various roles at the grassroots level, by the way, not as a staff person. And one thing I learned was that the working class is not stupid. They don't go and bust their heads against a stone wall if they don't think that they have a chance of prevailing. And which means you got to have organization. And we see the decimation of the unions over the last 40 years. And of course, the Democrats used to play some game with the working class, but now they don't do that at all. So there's no vehicle for the workers to express their discontent and any militancy they may have. They know that. They know that. Without organization, it's just suicide, economically or politically. So what do? They fall back into doing nothing, or they vote contrary, vote not for someone, but just to punish the guy in office or the party in office that's been screwing them. And we have this. Every 2-4 years, voting for the opposite, voting for the opposite. And, the capitalist class knows this, and they just play this shell game, back and forth, talk the talk, but never deliver. And slowly the working class gets squeezed a little bit more, a little bit more. They're like the frog in the hot pot, right? And they're turning up the pressure, and they look for other ways to survive. They take on debt, they put more people to work in the family, they cut their costs, they do whatever they can. And debt has been what the capitalists have thrown at the working class here in lieu of wage increases, you see. And they like debt. Capitalists like debt because it's a way of double exploitation of the working class. They exploit you in production. They give you less than what you produce and what you should earn, but they give you some wage. And then you take the wage and then they take back some of the wage they gave you by interest rates and charges, right? So it's a double exploitation. I've written about this before, exploitation in the era of neoliberal capitalism. how secondary and tertiary exploitation has intensified as well as primary exploitation, to talk about theory. But the big problem is there's no organization for the working class to express and to rise up with. And I think if there really were, you would see a different response.
Very interesting. Okay. Jim Goulden and Jean, and then we're going to wrap it up. Jim, please go ahead. Unmute.
Yeah, thank you. So I read an article sort of related to the previous. I read an article in Forbes that the GDP increase is split like 90% to the investors and capitalists and 10% to the workers. And I'm wondering how that compares. And another thing is the Chinese have 90% home ownership. The US around 66%, number 172 on the planet. Do the fact that these more progressive lifestyle situations evolving in China, et cetera, will that increase the likelihood that the workers here will become dissatisfied? Or are they going to be able to continue to provide the workers with enough to keep them from rebelling, as the previous question referred to?
Yeah, I don't think American workers have any sense of what other workers in the rest of the world, what their condition is. I mean, it's too preoccupied trying to survive day to day, raise their families, and live a normal life, right? So I don't think that and of course the media doesn't present anything that shows anybody else in the world better off, than the U.S. The ideology works in the opposite direction. We're supposed to be the best off, which of course is not true, right? So I don't think they have.
Oh, Jack, could you unmute, please? We accidentally got cut off. Go ahead. Sorry.
Yeah. Home ownership in China, I think, is mostly apartments, right? They own apartments there, like condos, right? They own their condos. In the U.S., we haven't had enough of affordable housing produced, particularly in the last quarter century. So most of home ownership, quote, has not expanded in the U.S. That's part of the crisis. They're just not investing in residential construction, affordable residential construction, the way we used to in the 50s and 60s, 70s. You see.
Right, exactly.
All right. Goulden, followed by Jean, then we're going to wrap up. So Goulden, please go ahead.
Thank you, Jack, for the excellent presentation. We were last September and October, we were in China for 2 months. And I agree with everything you said about China. They're watching the state TV. They're very proud of their accomplishments in Africa, actually. In addition to that, we observe that they're attacking their problems fiercely, whether it's an environmental cleanup or improving quality of their products or accomplishing technological reliance, their own reliance, etc. So they're upgrading their manufacturing and encouraging domestic consumptions. So it's obvious that China's economy is booming so fast. So my question is, how long do you think it takes China's economy surpasses U.S. economy and becomes another empire? And the second part is that, or involving forecasting the future, will Chinese empire become as aggressive as the previous empires like British Empire and U.S. Empire?
Yeah. Well, if you look at China, they are able to invest because the government directs the investment, and you don't have the capitalist in between. In the U.S., nothing gets done unless the capitalists get a big bite of it. It's privatized. If you want to do alternative energy, if you want to do public works, if you want to do AI or whatever, it doesn't get done unless the capitalists can arrange it so that they get the lion's share, that they get to skim everything off the top, right? Before to do it. Well, you don't have that private capital force skimming investment off the top in China. It's directed by the central government, you see. That's why China's been able to industrialize and advance much faster than the US. Now, is it as large as the US? Well, if you adjust prices properly, yeah, their economy is as large as the US and growing much, much faster. That's called PPP, purchasing power parity adjustments. A little bit of an art and all that, right? But nonetheless, if you make proper adjustments for inflation, their economy is as large as the US, and as I said, growing much faster. As far as China becoming an empire, there's no evidence that China is militarily attempting to occupy. I mean, the US has like 200, 180 military bases around the world, right? And all other, tools of maintaining empire. There's no evidence that China is occupying other countries. Now, they are investing a lot, and often they're investing on very lucrative terms for those countries, much better than they can get investments from the empire. Uh, I don't see China really, at least in the foreseeable future, uh, engaging on an imperial expansion, a la the way the U.S. and the West has done, uh, because it doesn't have that need to expand in terms of private capital, right? Now it will, and it is continuing as a way of competing with the West, investing in infrastructure and projects around the world, particularly in Africa, as we both are aware. It tried to penetrate Latin America, but it's now being driven out by the U.S. So it will probably intensify its investments and its Belt and Road projects, in Africa and elsewhere in Asia, I think. It will probably orient even more towards Russia, I think, because now its source of a source of its oil came from Venezuela. That's cut off, so it's going to have to buy more either from Iran or Russia. As the U.S. goes after Iran, you see that's the next big target of the empire. And China gets a lot of its oil from Iran, which is going to be a lot harder than Venezuela to pull off. By the way, I don't think they can, unless they can destabilize Iran internally, which looks like they're trying once again to do. Uh, the fact that the Iranian president a year or so ago was killed in a mysterious helicopter crash coming back from Azerbaijan. I don't think it was an accident, you know. So this is going on. The U.S. never gives up. The empire never gives up. It never leaves. It never walks away from a fight, whether it's Cuba or whatever. It just retreats. It bides its time. It signs treaties. Treaties are an indication of a temporary armistice, but they have no intent of keeping treaties long term. We've seen that occurring, with the ABM and other treaties, INF treaties with Russia. The U.S. has broken over 250 treaties in the course of its history. As I've argued in my book here, I'll leave on this. Imperialism is in the DNA of America from its very beginning, when the whole idea was to take over the land and the assets of the land in North America. It's been imperialist from the very beginning, and it still is. And I think the next target is probably Iran. In Americas, it'll be Cuba and Colombia. Venezuela, I mean, not Venezuela, but Brazil and Mexico are on the list here. But probably the next thing they got, now that they got Venezuela under temporary control, is they're going to turn toward Iran. And it's not by accident that Netanyahu was in the White House here past week.
Okay, Gene, last question. We're going to wrap up. So, Gene, please keep it short. Go ahead and unmute. Gene, go ahead and unmute.
Jack, thank you so much for your talk. A great talk. I agree, especially with your comments on China. That's it's a socialist country, not an imperialist country. But I just want to raise the question: suppose we get all that oil that's in Venezuela, and we burn that oil. What is going? I mean, the oil companies know what the consequence of burning all this oil is going to be. Disastrous ecological consequences for burning all that oil. So I just that's a question I'd kind of think we need to all think about. I have solar panels on my house, and my son drives an electric car. So, but that's an issue I think we need to deal with personally and also politically. But again, thank you so much.
Well, I don't think the U.S. capitalists, especially those behind Trump, that wing, really care about carbon emissions. I mean, they're trying to deny it all, and they're gonna, you know, drill as much crude and process as much crude as they possibly can. And as I said, they need that Venezuelan oil, redevelop that to provide for the rest of their core of their empire, which is Europe, right? They need that. And that's why they went after it. And that's why Trump says, oh, we're going to run this country. Yeah, well, they're going to try to. Who knows what's going to happen longer term? But I think, you'll see the oil companies come in. They will take over. They will denationalize all of the oil companies in Venezuela. The U.S. companies will take it over and run it. And a lot of that, that oil will be provided to Europe, I think. And that's what it's really about. And there's massive reserves in Venezuela, more than in Saudi Arabia, So that will sustain the U.S. Military industrial complex and the oil companies and capitalist energy here for decades to come. And they will exploit it, and they won't give a damn about the environment.
Okay, thank you very much, Jack. Incredibly informative talk. I also want to thank the audience. I thought the questions were terrific and the range of questions, the depth of discussion. There's going to be a recording of this session. It'll be posted within a day or two on our YouTube channel. You can find a link to it on our website. It's probably worth listening to again and taking notes. You can store up your questions for the next time Jack appears. I want to remind people to sign up for our website for email notifications at icssmarks.org. I also want to ask people to make donation to our program. We do have costs, and we tend not to spend enough time on asking people to donate to support us. Also, very importantly, come back next week to get more of the inside view of what's happening in Venezuela. I think it's pretty safe to say that it's not over yet. It's unfolding. Let's see how it unfolds. You're going to get sources of information here on Sunday Morning Marxist Forum that you're not going to get in other places. I want to thank Jack, apologize for running over. This was probably the most interest that we've had in a program that I can remember. So thank you very much. And do go to his website, and you can pre-order his book to get a copy. I'm looking forward to reading it. And this was just a great session. So thank you so much, Jack. And thank you to the audience.
You can pre-order, go to the publisher, Clarity Press, if you want to pre-order. And when it comes out, it'll be on Amazon, but you can pre-order Clarity Press.
All right. Thank you, everybody. This was a great session. We went way over. Very, very good. Thank you so much, everybody, for